Yes, you must maintain your flexibility when dealing with Tesla. Thus, I believe the message we are trying to convey to investors is that regardless of whether you bought Tesla at our previous target or the new one set today, you need to be investing in something more than just automobiles. There must be more to it than just automobiles and price. Additionally, we are attempting to open up neurological pathways related to software as a service and battery supply for our clients. This movie shows how the pulse of the current financial markets meets the future of electric automobiles. We're delving deeply into Morgan Stanley's most recent surprise regarding Tesla's Q4 earnings in this thrilling episode. Please fasten your seatbelt as we take you through the many turns and turns of Tesla's financial journey, a tale of creativity, rivalry, and market forces that is changing the rules of the road for electric cars. We'll examine the tectonic change in Tesla's trajectory that Morgan Stanley's eye-opening remarks indicate in this intense conversation. How is the EV titan modifying its course in the face of impending market storms, and what implications do these discoveries have for the company's growth? We set out to analyze the consequences of these changes for investors and EV aficionados alike, given that Tesla's recent profits fell short of expectations and the company's growth plans took a dramatic turn. But there's still more. This goes beyond mere numbers. We're exploring the calculated risks that underlie Tesla's audacious actions. How will Elon Musk's direction guide the business in these unfamiliar waters? What does Tesla's future contain in an EV market that is changing quickly throughout the world? Keep checking back as we address these pressing issues and more. Don't forget to enable notifications, subscribe to Tesla Stock News, and click the like button. You will not wish to miss a single moment of this gripping narrative. Now let's dive straight into the center of the most recent financial scandal involving Tesla. Given its struggles to fulfill analyst forecasts for earnings, Tesla's financial status is a topic of much discussion. The business's latest earnings missed estimates, indicating that this year's growth may slow down. Our specialists draw attention to the crucial word that Tesla used, notably lower, which denotes a noticeable slowdown in the company's rate of growth. Investors and market analysts are becoming concerned about this word. Examining the details, Tesla failed to meet its revenue and profit goals. Positively, though, the company's gross car margins, which do not include credits for zero-emission vehicles, surprisingly exceeded projections, coming in at 17.1% as opposed to 15.7%. This statistic is more than simply a figure. It's a crucial indicator of Tesla's operational effectiveness and its capacity to continue turning a profit in the face of difficulties. However, the prognosis for 2024 is the main area of worry that is receiving attention. Here, Tesla expects growth to be slower than the strong increase of 2023, particularly with regard to yearly vehicle deliveries, a crucial indicator of the company's performance. Tesla's CEO, Elon Musk, clarified the matter in a conference call. He blamed the company's switch to next-generation automobiles for the expected slowdown. There are plans to develop post-manufacturing facilities worldwide, with their Gigafactory in Texas serving as the first. The general slowdown in the growth pace of the electric vehicle (EV) market is another factor that cannot be disregarded. Although Tesla continued to lead the world in EV sales in 2023, the Chinese manufacturer BYD gave it fierce competition in the fourth quarter. Musk also emphasized how quickly Chinese automakers are spreading over the world, implying that if trade barriers were lifted, they could pose a serious threat to other competitors. Over the previous year, Tesla's stock has fluctuated. Nevertheless, the energy storage section has shown a noticeable positive feature, increasing by 30% year over year. Investors are still concerned about the lack of clarity surrounding car delivery in 2024, though. In addition, the Chinese car industry as a whole is slowing down, which has an effect on Tesla's Gigafactory in Shanghai and raises the competition from Chinese electric vehicle manufacturers. Plans for international distribution and sales tactics need to be reevaluated as a result of these considerations. An important event is that Morgan Stanley's Adam Jonas updated his price objective for Tesla to account for shifting dynamics in the electric vehicle market. This modification points to a change in customer preferences and market expectations. Today's conversation will explore Jonas's analysis and examine how it stacks up against broader industry trends to determine what this means for Tesla and the EV market as a whole. Analyst Adam Jonas's recent modification of Tesla's price estimate is a noteworthy indicator of market sentiment and could indicate a change in the direction of the electric vehicle (EV) sector. This change is in line with the increasing opinion that, despite its growth, Tesla is facing challenges that may cause it to slow down. The market saturation and increased competition are two major causes of this decline. This nuanced viewpoint may not align with the opinions of staunch fans of Tesla, but it is an important warning to investors and industry watchers. It represents a break from the previously unrestrained excitement that has defined the growth narrative of the EV sector. The EV industry is undergoing a shift in its dynamics, with rapid growth and expansion being balanced with a more cautious assessment of future prospects. This recalibration and prognosis highlight these changes. The market reacted quickly and significantly to Morgan Stanley's increased Tesla price estimate, indicating that Tesla's prospects for future growth have been reevaluated. This decision is being keenly watched by investors and industry analysts, who see it as a reflection of broader developments in the sector for a major financial institution. Discussions over the sustainability of the EV market's recent rapid growth have resurfaced as a result of this recalibration. The story of Tesla's rise, which was once very optimistic, is currently being seen from a more realistic angle. The main obstacles facing the EV maker are becoming more and more competitive and market saturation, despite their continuous expansion. Tesla's stock performance has declined from its recent highs, indicating this shift in sentiment. Even though the EV market is still growing, it faces a challenging environment. Hybrid car interest is rising, which points to a slower transition to all-electric vehicles than was previously thought. The fluctuations in raw material prices, supply chain interruptions, and changing government regulations, in addition to this tendency, complicate the industry's growth projections. Because the market is readjusting, analysts such as Adam Jonas are taking a cautious approach. Nonetheless, Jonas's assessment of Tesla's worth still takes into account the company's various business sectors, including as energy solutions and prospective earnings from fully autonomous driving capabilities. Jonas's updated price target has more financial ramifications than just stock valuation. They draw attention to possible changes in Tesla's production and financial plans that are crucial for observers and investors. Tesla is facing criticism for its gross margin, a crucial sign of its financial health. A predicted decline in these margins points to possible production cost issues or pricing constraints brought on by the competitive EV market. Tesla's approach to production is equally important. In order to meet demand, the corporation must strike a balance between controlling operating expenses and raising production. This endeavor is made more difficult by the existing market dynamics, which are marked by an excess of EVs and erratic customer demand. Tesla might have to adjust its production output to better match the real demand of the market, which would have an immediate negative effect on profitability, but might also present an opportunity for innovation and market growth. The CEO and president of Gerber Kawasaki Wealth and Investment Management, Ross Gerber, observes a significant change in Tesla's narrative from one of a fast-growing EV-focused business. With hurdles including delayed product introductions, supply chain problems, and the need to lower vehicle prices, which affects margins, Tesla suddenly seems more mature. Investors should take this shift in Tesla's story into account as the EV industry gets more competitive and uncertain. Investors are now carefully examining the facts and the company's future trajectory in the wake of the CEO's hefty remuneration request. A more general theme in the EV industry is striking the correct balance between innovation and commercial pragmatism, which is highlighted by these disparate methods. The most important question for Tesla is whether continuous price reductions in response to market forces and competition are viable. Analysts think that in order to preserve its margin advantage, Tesla needs to indicate where the bulk of price reductions end. In China, Tesla faces an especially difficult issue. Tesla confronts fierce competition, despite having a record-breaking quarter in Q4, so it must carefully strike a balance between lowering prices and keeping good margins. The early burst of explosive growth is giving way to a more complex competitive environment as the larger EV industry gets recalibrated. Analysts like Adam Jonas are drawing attention to the complex and dynamic environment that Tesla and other companies are presently operating in. Thanks to Jonas's observations, the many opportunities and problems that Tesla has in this fast-paced business are highlighted. The market is complicated not only by technology advancements, but also by the degree to which businesses, such as Tesla, are able to efficiently manage their finances and adjust to shifting market conditions. As a leader in the electric vehicle (EV) space, Tesla is currently facing significant criticism for its financial management, market adaptation, and innovation plans. The business is well known for its innovative technology and aggressive growth strategies. But the state of the market today demands more than simply technological aptitude. In order to stay competitive and adapt to changing consumer tastes, a strategic recalibration is necessary. As the EV industry develops, Tesla will need to adjust to the changing market in particular. Competition is escalating and consumer preferences are broadening. In order to adapt to these developments, Tesla must recognize that customer needs now go beyond the technical features of the vehicle. A growing number of consumers are thinking about things like cost, sustainability, and the wider social impact of the products they buy. To stay at the top of the market, Tesla will need to be able to modify its marketing and product strategies in reaction to these changing consumer demands. For Tesla, financial management is yet another crucial issue. The company's profitability and long-term sustainability will be greatly impacted by its pricing strategy, cost control, and investment choices. As rivals and a potentially more price-sensitive market put pressure on Tesla, prudent financial management becomes critical. This entails setting prices strategically, managing operating expenses, and making prudent investments in potential growth areas. As we get to the end of our talk on how Tesla is changing the electric car scene, it is evident that there are both opportunities and problems ahead of us. Once known for its unrestrained expansion in the electric vehicle industry, Tesla is currently negotiating a challenging and evolving market. The dynamic in the EV industry is shifting quickly, as evidenced by the recent adjustments to Tesla's profitability and the cautious recalibration of its growth predictions by analysts such as Adam Jonas. However, the issue still stands. How will Tesla, led by Elon Musk, deal with these new difficulties? Will the corporation be able to restore momentum with its focus on initiatives like the Cybertruck and the Mexico factory? Or will other forces keep influencing its course? How do you feel about Tesla's potential for the future and its current position? Are you keeping an eye on any other electric vehicle firms or market trends? Post your ideas in the comments section below. If you